Greetings, Jedi traders. David here of TradingFibs.com to bring you the State of the Indices Market Outlook recap for the week finishing up January 22nd, 2016, 3 weeks into the year. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge of the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, with 1 week to go in January of the new year, price action finally finding a reprieve after 3 weeks of selling at the lows of 2014 and 15. Wednesday trading initiated finally a bounce off the lows, clearing out all the key open gaps that we've been talking about for a while. Articles written by myself back in November of 2015 and recently a couple weeks ago at seeitmarket.com. And we've been continuing to climb its way upside. Once again, leaving open gaps below. The market surely will turn again at some point and closed out unfinished business. But for now, we are upside. A little bit of a rally the last couple days. PM session trading pretty much to be avoided like a plague on Thursday and Friday, as price action volatility could wipe out your account in minutes. Highlights of the week continued to be the 50-144 EMA chart has guided the bigger trend in conjunction with the other charts. We'll take a look at that in a little bit. Whether it be a downside or upside target of choice, the T3 cross in conjunction with the 50-144 EMA continues to be my force to contend with when wanting to remain in the trade for the long term. No guarantees of ever hitting targets far off every day. However, the highest probability entries and trade management gives you that chance. So let's jump right into the charts. Taking a look at the market profile, we can see in front of us price action, a lot of sideways action, both on volume and market profile. Again, volume profile, if this is the first time you've been seeing this, a little bit more representative of where the majority, 70% of the trading occurred in a given day, including the mean of where the majority of trading. So for instance, here on the TF Russell today, representing a very smaller time frame than some of the other days, but your 70% range represented by value area high, value area low, and the point of control finishing up near the high, 10-17-20, and almost closing out a point of control upside. As we've been saying for several weeks now, plenty of action still remains to the upside as we've been coming down, but the good news is price action continue to come down in the first 3 weeks here, in the last 3 weeks of price action of the new year. We've been closing out unfinished business below, which includes open points of control and daily gaps. So two open points of control here on the TF, 996.40 and 990 and 966.90. Again, unfinished business below means that market action will eventually turn downside and close it out. So we can see here, again, pretty healthy market profile for the weekly charts, as we can see price action, again, closing out former points of control, a little bit of a weak base here on the NQ value area low, as well as the TF down here, not having much of price action to the outlier downside, but for the most part, as we can see, price action bounced off Thursday's price action here all across the board, including the crude getting a lift from well into the 27, almost 27 and a half, and bouncing its way back up to 32. So again, one key chart that I use daily to again look for that point of control. Intraday trading, you always see price hover a lot of times outside of value area, retrace. That again ties in with the intraday setups. But again, looking just at the market outlook right now, we could see that we're leaving some unfinished business below. Note always the 600-day major VPOC. We almost hit that here on the NQ up here, 42.64. So on a 600-day moving period here, we have plenty of room to move back upside to get back to that mean. So over the 600 last days of trading, where is the majority of that trading? And that still remains to the upside. But for the NQ, we're right there, 42.64. So keep that in mind. That might be a point of control. That market action might just float around for maybe next week. It's a possibility. So we'll watch that every day and recap that next week and see if that came out true. So keep that in mind. 42.64, and all the rest of the numbers seem to be upside. 1140.3 on the TF, and upside on the YM up here at 17,634. ES open point of control up at 2075, and the crude way up at 49.16. So eventually price may just migrate back up to those numbers and hold there for a little bit. All right, jumping into the market profile, we could see that price action again for this week starting out pretty much sideways, but again it was closing out all those daily gaps to the downside. Nothing absolutely remains nothing on all of these indices except for Thursday. So now we're going to go ahead and clear these dashed lines out. So right now 1861.25 is the last point of control, and here on our technical bias that's posted each morning on my Twitter site, the overnight sentiment today was bullish, and then the swing position pretty much kind of quasi bullish, more intraday, and then the swing position was more bearish. So for the swing position in the long term, we've been looking pretty much at a bearish picture. We'll take a look at those charts today, but just taking note here, it was the major open gaps downside. Major open, again, all these terms up here, just an indicator of where market is sitting based on the moving averages that I used. A rally is a rally, gives you bullish intraday swing positions, but it's these numbers. When these words up here indicate bearish, we're going down and tagging major open gaps. And as you can see, last week this chart had some open holes. We didn't have these closed out yet, but there it is. Open gaps closed out. Major open gaps is typically a hole where price action absolutely cleared the recent price action which we had today, and you'll see that we clearly moved well above Thursday's price action and now have left a hole in some of our daily regular trading hours, which to me is a major open gap and eventually will be closed at some point. When that happens, I can't tell you when that happens, but I can tell you the probability increases when the intraday picture starts moving in that direction, and when the swing position as well. All right, so here we are, market profile. Again, same picture as the volume profile. Again, very much an intraday, but kicking upside here. TF leaving us with a open gap 1861.25. The weekly opening price 1869.50. So closing above there. And I'm sorry, wrong chart here. This is actually the ES. I'm sorry, I'm reading the prices. I'm noticing a little bit off here. So yeah, 1869.50 on the ES as price action rolled down here and then kicked upside. All right, let's go backwards to the NQ. NQ, same picture, very much intraday. We have an open gap up here around 42.47, and we'll go ahead and adjust that. But open gap right up above 42.58. We closed out a lot of unfinished business. There it was. These three lines have been sitting there for weeks. 40.74.75 and 39.97. Whoa, we're not coming down there. We're not getting down there. And you go back to my article posted back in November, you'll see those lines exactly. I was talking about that. We were going to come down, close that out, and look what we did. We absolutely rallied right back upside, 39.97.50. How about that? So open gap taken care of, and it was rally from there. The only open gap we have now is 41.30.50. So hopefully market action will come down and close that out. Jumping into the YM. YM again. Similar picture as the other charts. Sideways action for the beginning of the week, dropping it down on Wednesday, clearing out some lows, and then eventually just bouncing right back upside, leaving us with an open gap here at 15,793. Weekly opening price 889, closing just slightly above that. New open gap up here around 1604, and obviously plenty of room to the upside as market action will retrace the upside. Taking a look at the Russell. Russell, same picture. Again, point of control down here at 964 for Wednesday's price action. Another line to be cleared out. representing 600 days of price action. There we have all our open gaps up above and closing out at 1014, excuse me. 999.4 was the weekly opener price, so slightly moving upside and getting down to the 950s. Haven't seen those kinds of numbers in a while, but we'll go ahead and take a look at the daily and the weekly charts and see where the support was. Moving back to crude, we could see weekly opening price at 30.24, following down to 27.50. We mentioned that before in the volume profile, leaving an open gap at 29.84, which eventually will be closed out. These are the holes. These are the holes that I talk about when price action clearly jumps upside and leaves this regular trading hours hold. These kinds of holes eventually get filled. Now, whether you don't watch regular trading hours, don't believe in open gaps, etc., it don't matter. If I can't prove it to you on the NQ here, and all I'm talking about is the index futures. I'm not talking about stocks, ETFs. I'm talking about index futures. Open gaps eventually get closed, and look at that, 39.97. That thing's been sitting there for a while and got closed out and moved back up now. Upside. Now, that doesn't mean the market might not turn around and continue to move to lower lows. We have plenty of room to the downside. We're talking 2009 to 2015, 16. We're talking about highs. We didn't hit a high in 16, but 2015 and 50% Fibonacci pullback. Well, we still have room to go downside, which just means we'll leave more lines to the upside. But for now, a market that's been selling off for 3 weeks, that is a great indicator there that we take care of unfinished business to the downside and move back up. Now, what tells me that we're moving back upside? Well, let's just start with the TF, and the question is, how far back upside? I can't tell you that. All I can tell you is that on an intraday basis, we look for the highest probability setups, not necessarily based on the bigger picture. Obviously, if the big picture has bearish written all over it, intraday setup has bearish setup, then obviously that has a high probability. But right now, market outlook, I can't ever tell you where we're headed next week. All I do is wrap up each of my market sessions here by telling you I only trade the charts that are in front of me. That's about the best wisdom I can give you. But in our, today we started our overnight session to the long here on the all 4 indices. We're pretty much to the long from overnight. There was overnight session to the upside, and then look what happened. Price action came downside, and so offered an opportunity to trade to the short, and then eventually market turned back upside, which puts you back into the long position. Again, big picture that I've been talking about for weeks. We are still in a bearish territory. Volatility finally crossing the 5 SMA here on the 1-day or daily chart, excuse me, and weekly still downside. So I think you can appreciate the long-term picture is still downside, has a ways to get up here just to reach the 50-period moving average here on a daily, which is around 1100. But swing position right now, or overnight swing position usually is down here, lower left corner. 4-hour chart here, we're just starting to breach the 50-period moving average. If we can continue up to this 1050, have a higher probability of perhaps pushing upside, but not there yet. So I'm going to take a short position all around, watching the overnight position, going into the intraday session. I'll go ahead and wrap up today's presentation with how do you apply that to your intraday setup. So again, TF Russell outlook still downside, but rallies are rallies. And right here, these 2 upper charts here, green and green with a possible crossover here. We'll have to see how Sunday open, Monday price action. If we're all in the green here, good probability that we perhaps continue that upside, but that would definitely have to match the intraday setup. Let's go ahead to the Fibonacci draw. We can see we closed that out back here in January. Price action on the Fibonacci's have been closing downside, taking care of unfinished business below. 1 fib extension still down at 898.3, but there it is. There's those major open gaps where price action just never even touched back. So that is that's almost in line where those 144 or 50 period moving averages on my 4-hour charts around that 1100. I could see price action perhaps coming back up here. Give us a Fibonacci retracement. We can go ahead and draw from the high to the low. So take the 1160 here. Draw yourself a fib retracement, And so now you have a 50% level. 1057.4 could possibly be a level that the price on the market retraces to. All right, let's jump into long-term YM. Same idea, same picture here, guys, as the TF. The idea here is long-term picture has been downside. The weekly downside. Finally, we're finishing upside above the 5 SMA on volatility. Daily still remains downside. 50-period moving average up here at 16,800 on a daily. 16 around 400 on the 4-hour chart. So that's our swing position. So all 4 of these charts still in the short, the bearish position. But again, watch that 50-period moving average as we go into next week. Overnight intraday sessions represented by the 2 upper charts here on the left. Again, we're finishing up the day to the long on the 4-hour and 50-tick chart, a little bit higher time frame, finishing to the upside. Let's take a look at the Fibonacci. Fibonacci draw here. Again, no major setup. Again, if this is the low of the session, we'll take the high approximately to the low here, which gives us a 50% pullback to around 16,507. 16,507. Let's go ahead and draw that a little bit more accurate. There we go. About 16,513 would be a 15%. Again, look at that. We're reaching the October 2014 lows here breaching now the way down to 15,360 and bouncing back up. So very healthy return in the market on the YM, back to the upside again, just as we saw in the TF, leaving ourselves with a slight open gap here. Let's go ahead and open that up here. Here we could see price action not leaving a hole as much as we did up here, but again, we got an open gap. We have an open gap here, and we need to go back to the upside. All right, so any other key lines here? Again, you can see here on the weekly price action testing some of those 2014 lows. Go ahead and draw yourself a a line down here. Price action bang right there, right down to let's get that line there. There we go. Price action again. This is 2014 lows on a weekly chart, coming all the way back down here. Over here for the what was that? This is a daily chart. This is a daily chart. Let me look. Yep. Sorry, weekly chart. So actually last week reaching those lows, 15,364. I think we mentioned that last week in the weekly wrap up. So let's move into the NQ. Again, NQ finishing off the week to the upside, all in the green. Price action now breaking above. So, a little bit of still bearish, but starting to be a little bit bearish neutral as price action breaking above the 50. Again, long-term charts still to the downside, reaching some key levels here. Again, Fibonacci retracement here to 23%, 40.58. If we're truly going to recourse all the way down on this long move from 2009, we still have plenty of room to come down. 33.03. That will just leave a lot of daily open gaps up above. But hey, if the market action will go down, it will go down, and we just ride in the other direction. Taking a look at the Fibonacci, again, with price action now bouncing back to the upside, we go ahead and do the same thing. We take the high of the high. I might redraw these a little bit over the weekend, but high of the high to the low here of this recent move. We're almost up to 38%. 50% up here, 43.41. You can see the NQ almost coming down actually here. Still having a level down here back from 2014, 825. Let's get that date there. That should be August. That's right. August 2015 on a daily chart with a low down here, 38.8875. But for now, price action, let's go back for a second. We showed on the market profile on the NQ 39.9750. So we did not we didn't get anywhere near here. So if we're still to come down, look at that. We found some support here back from September 2015. Still a line downside, 38.8875. So watch that. But for now, the short term here, we have price action rebounding. We still have some open holes up above here. Let's go ahead now. We have again, another open gap, a hole to fill as price action eventually will come down here and close this open gap. All right, so that's our NQ. Again, big picture is still to the downside. Swing position, a slight shift. Watch that overnight action on the bigger time frame, 4-hour chart, and the 75-tick range chart and the NQ, and line that up with an intraday, and you have again, intraday trading goes in both directions, but for anybody in a longer term position, you might want to watch the higher higher time frame charts. All right, jumping into the ES, same picture. Look at that daily, finally a green candle. Price action closing above the 5 SMA. Weekly still downside. Let's take a look at the weekly chart here. Weekly chart here as we came down again to around those 2014 numbers here. Again, 2015 August here back in October. Again, a lot of these lines being tested. 18, 14, 50 down here. From back in August, and then 1851.25 here in September, and price action again on a weekly chart testing these lows and bouncing right off them. Again, looking at the daily chart price action here, we have 1813.50 back in August, and on a daily chart right here 1853. As we can see, price action on the ES, again, you want to draw yourself a Fibonacci retracement over the weekend. Take whatever moving average you're following, 50-period moving average or whatever, draw from the high to the low, and what you have is yourself a 50% retracement. 1940, we break the 1971.92, we broke in trend. Now, keep in mind here, ES, while other indices love to follow fibs, this is a key line here. As we note, we have plenty of room to move upside, close out unfinished business. But right here, we almost have this gap that can be closed up here in 1971.92 if we were to reach back up to this 61.8. So unfortunately, if we run it all the way up there, that means at some point, we mentioned on the market profile, price action is going to retrace and eventually come back down to these numbers. So while, hey, you know, the market moves up, it moves down as well, and it goes in other directions, and so just keep that in mind. So again, big picture for the ES, we still have room to come back up to the upside on a fib retracement. We have unfinished business above. What will guide me towards that is obviously the two charts on the left up here, which would eventually be all in a bullish trend. Swing position would break upside above the 144. It's going to take a longer time for the daily and the weeklies to catch up. So I'll look for the swing position to cross above 1940, which will be around that 50%. And but the intraday session obviously focused here on the 4-hour chart, and the 100-tick range chart on the ES puts you in the trade to the long. Let's take a look at crude. Crude again with the bullish trend up here. Price action breaking above the 50. So swing position now in a bearish neutral position. If we can cross above that 144, then I have a higher probability of continuing upside and closing out some open gaps up above. Big term still looks downside. 5 SMA downside. We finally broke upside. Look at that, right above volatility. Now, key to keep in note, we jumped off the lows of 27. Unfortunately, crude has a lot of business to finish to the upside as far as open gaps are concerned. You can see here the crude with this big hole right up here around 42. We got a hole around 36. That's one of the major open gaps that I have here on my charts. Here it goes, 32.18, 36.14. I believe we might have actually taken care of that 32.18. Let me see here. Yep, 32.18 covered today, closing out this hole right here to the upside. And so next targets will be around this 37 and then up to 42 on the crude. Again, like the other charts, what makes ensure that we're going upside? Take a look at the charts on the left here. We're all in the green. Swing position will switch, move above that 144. I'm not looking for my long-term positions to get me up there. Long-term tells me, hey, we're finally back into a bullish trend, and obviously the bearish is written all over crude, which many of you have been seeing for the last almost year. All right, so that's crude. ES, NQ, YM, TF, again, going into next week. Let's take a look at, let's go ahead and take a look at the intraday. That's what I wanted to highlight here. So this week's focus was trading the YM. YM we knew was coming down to some lower term levels, closing out that October 2014 gap. Again, Wednesday's price action with that huge drop down, testing that low, and then bouncing back upside on Wednesday and Thursday and Friday. Again, PM session could wipe your account out, but that morning session had some great trending trades in. So let's go right out to our screen share, which is one of the charts shown in the trading room. Here we have today's price action, both to the downside and to the upside, always ready in both directions. Several charts here to indicate that the trend was pretty strong to the downside and eventually turned back to the upside here. So the two key trades focusing on here to the downside and to the upside. Now again, why not the other trades? Well, those were all possible trades, but what I want you to keep in note is we started the day out on the long-term YM with a if you see the chart here on the here we go, it was all bullish to the upside. All right, there was our 50-tick chart to the YM. So overnight session was all bullish to the upside. 4-hour chart was all bullish. Doesn't mean we didn't have price action offer an opportunity to the downside, which we saw here. This is market open, overnight session to the upside, price action now to the downside. Again, we look at the big picture and we say, all right, the overnight session was upside. And so the bias to the overnight was upside. And we go to our intraday and we say, all right, what opportunities will we see intraday? And obviously, market opened up here at the 9:30 Eastern Standard Time, which still offered an opportunity to the upside. But we say we trade in both directions. What does that mean? What does that look like? Here we see a sell position come into play because the charts, the T3 moving average crossover, the 534, the 20-tick range chart, which is used as a market internal, including the 5144, which I repeatedly use as a source to enter into trades. It is a market internal that supports not necessarily the bigger position, but the intraday position. So what I use on an intraday is the same thing that would be used on a bigger picture for any longer term holds. And so we see price action lifting up in the morning, finding that support at the 50. Is the market going to continue upside? No, eventually it actually turns downside and then offers an opportunity back to the upside. And so taking a look at those several trades this morning, here was the one to the downside. There's that sell signal I was just mentioning. We have 3 charts in the red and a technical bias shift to the bears as price action crossed over the 144. Once the technical bias was confirmed on the crossover, offered an opportunity to the downside. Now, whether or not we get downside targets or not, that's that's up to the market. I'm not in control of that any day, so you manage it to the best of your ability, and that's what puts me into the trade. And then back to the upsides, we saw price action here crossing over as price action finally crossing over on the 5144, placing you in a trade to the upside. Whatever target you're looking for, these were Fibonacci lines to the short. As you can see, very respectable lines. Price action bounced after that, held at the 61.8 and ran right up to today's open. So same idea, using the long-term picture to have the bigger picture in mind, but it's the intraday picture that puts you into the trade with the same ideas, same setups. Again, if you go back to the charts, you go back to the long-term charts. All right, you go back to the long-term charts here. You see the price action holding upside on the swing position. That doesn't mean the market's not going to come down, but the longer-term picture, well, I know, do I not take a trade to the upside because the daily and the weekly are still to the downside? No, you have to trade to the other direction as well. So you have to use a different time frame. Use the time frame that's most comfortable for you. All right, so that's it. That's really the highlight. The lesson of the week really was about the 5144. Looking on market outlook for the rest of the week, we reviewed that, but using that 5144 for the intraday session on the crossover, just like you would use a bigger time frame entry, finding support levels. This was Wednesday's price action with the crude coming out and then offering an opportunity back to the upside up to the open point of control. And that's, again, tying in why do I watch point of control, why do I watch open gaps. These are all lines where I might decide to take off a contract or manage a contract on the way up. All right, looking into next week's price econ data, we're looking at FOMC on Tuesday. So it should offer some great price action, including FOMC meeting announcement finally on Wednesday, which wraps up the week with GDP and international trade. So almost guaranteed to be an extremely good week on the market. All right, that concludes the insight into the state of the indices, crude, market outlook, and recap. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter and at Trading Fibs. And as always, I really do leave the crystal ball to the experts. I only trade what's in front of me on my charts. Everybody, good day, good night, and good trading, and have yourself a Blue Zone weekend.